today's webinar on a very interesting subject, banking automation and transforming the financial services. The focus is on cooperative banks and small finance bank, where they are today in automation, where we are going to see it tomorrow, and what is the need. This is what the very interesting topic. We have lined up very eminent speakers. I'm not going to talk much about the topics because each of the speakers are experts and they are going to talk on in detail. What I would like to do is that briefly tell about the webinar organizers. To start with Refinitiv and Almus jointly hosting this webinar of today. We have been doing from the last 2 years. And in brief about Refinitiv, a London Stock Exchange Group business, is one of the world's largest providers of financial markets data and infrastructure, enabling customers to execute critical investing, trading, and risk decisions with confidence. As the dynamics of the world economy change, the role of the central bank is also evolving, more so at present. New tools and technologies are changing the way financial markets are operating today, keeping the requirement of both the central banks and the financial markets in view. Refinitiv has developed a holistic central bank proposition that includes products and services covering a broad spectrum: open market operations, auctions, secondary markets, post-trade, regulatory reporting, market surveillance, benchmarks, economics and research, portfolio management, and data and analysis, etc. About Almus Risk Consulting Mumbai is the risk management company whose specific focus is complete tactical and operational solution, specializing in foreign exchange treasury, covering currency rate risks, related interest rate risks, and commodity rate risk. The client can choose to outsource its entire forex treasury, front office, middle office, and back office, or component of each activity being performed on technology management system. Almus team and partners have corporate treasury expertise and practical experience, as well as technical and fundamental knowledge of financial markets. Almus is headed by partners with wide and rich experience in banks, including public sector, private sector, as well as foreign banks and corporate treasuries. Now coming to today's speakers, we have lined up with a very senior banker, very passionate banker on technology, Mr. Mohan Tangsale, a career banker, spent over 4 decades in Indian banking industry. He retired as the chairman and managing director of Central Bank of India, one of the largest banks in India. Prior to this, he held positions in Union Bank of India and Punjab National Bank. Given his wealth of experience, he then became, after retirement, Chief Executive Officer at Indian Banks Association, and in this role represented the entire banking industry for the period from December 2013 to August 2016. Mr. Mohan Tangsale is passionate about the role of technology and innovations in banking and recognized as a change agent. He is keenly committed to leadership development and mentors business leaders in the field of banks and finance. A profile speaker, he has delivered a number of keynote addresses, numerous seminars, forums, workshops, management associations, educational institutions. He speaks on subjects related to banking, economic compliance, strategy, and leadership. A warm welcome to you, sir. Nice to have you today here.
Thanks.
We have Catherine Vallance. Catherine Vallance is the head of Enterprise Data Platform Solutions, sales for South Asia and Pacific at Refinitiv. She has over 15 years of selling and partnering enterprise content to financial institutions in global markets. Her area of expertise is across pricing and reference data solutions. I have been interacting with her for the last 2 days. I'm sure she's a very good speaker too, and you will get a rich experience of how digital automations happening in the financial institutions. We have a young man in Aniket Patni. Aniket is an enterprise specialist at Refinitiv and is responsible for managing market data and infrastructure business in South Asia. He has been working in banking and financial sectors since last 10 years and have extensive experience in derivatives across sales, structuring and trading. Outside work, he has represented India in international level junior chess championship. Currently, spending his weekend playing actively with his beautiful 3-year-old daughter. I don't think his daughter started playing chess yet. Sooner she will learn that too. Ashish Singhal is the managing director of Shamrao Vittal Cooperative Bank Limited, the second largest cooperative bank in India. He had a privilege to work in the foreign banks, the new private sector banks, and various organizations. Singhal is a banking domain expert, having worked in Standard Bank, American Express Bank, and ICICI Bank in multiple roles. He has worked in business intelligence, branch banking, innovation, as well as digital banking and artificial intelligence. He is a certified design thinking professional and believes in customer-centric innovation and service delivery. That is very passionate word for me. Serving customers, we all survive only because of customers. And for that, we have to have an innovative idea. I always say, devotion to duty is not a sacrifice. It is your existence. So customers are our existence. He believes in harnessing power technology as a force multiplier for any business and has successfully led and growth multiple business lines with usage of data technology. He is an avid supporter of innovations and startups and is associated with multiple startups, either as a mentor or as an angel investor. Sir, a warm welcome on behalf of Refinitiv and Almus to you for this webinar. With this introduction, now I request Catherine Vallance to take over and conduct the webinar. She is the moderator and the speaker. Over to you, madam.
Thank you, Venkatesh, for the introduction. And good afternoon, everyone. I'm really excited to be moderating today's panel on the banking automation and how it's transforming the financial sector. We'll begin with an hour of the discussion amongst our panel of experts and then go on to a Q&A. So please keep those questions in mind and enter them into the chat as they come to you, but we will discuss them later. So over the past few years, we've seen the biggest shifts in the financial industry within the digital transformation and automation space. During this panel, we'll explore who are the winners, who are the losers, and who's going to be impacted. I'm sure you're on the edge of your seat. So let's kick off. Welcome again, Mohan, Ashish, and Aniket. We're privileged to have your time today. So the creative use of technology is transforming the world as we know it, whether it be AI, intelligent automation, big data, crypto, digital payments, and the list goes on. Why do you think this is happening? And why do you think this is happening particularly now? And I'll kick off with you, Mohan, if that's okay.
Okay. Good evening, all the dear participants from the banking industry. Welcome to this webinar on the banking automation. I think the most important initiative for financial sector today to not only survive, but to grow and meet the customers' expectations. I've been in the sector over 4.5 decades and have witnessed the journey of the computerization and technology right from zero to, I can say, almost 90% plus usage of technology in the banking industry. And I would like to quote here, I'm sure all of you would have heard of, Bill Gates had said maybe about 10 years or 15 years back that the banking will be relevant, not the banks. But having said that, let me tell you that the banks will have to create such an environment, such enablement that you are really meeting the customer's expectations. Now, I would like to really tell you 2 minutes on the history part. As I said, right from zero, in 1988, for the first time, the computerization was introduced in the banking industry through a Rangarajan committee. And thereon the core banking initiative started. And today, every bank worth, including cooperative bank, they are having minimum core banking. But the entire sector, be it public sector, private sector, the small finance bank, or even the cooperative bank, they are all looking for that. How can I enhance the customer's experience? Because today the competition calls for not only that you need to retain your customers, but you have to ensure that you attract the customer and you are able to serve knowing them 360 degree. I mean, that's very, very important. And how do you do that? I think that is possible only through the proper usage of the technology. And today, the technology is much beyond mere payment systems or accounting systems. I think the lending is becoming a necessity. The banks are working on it. Then I always use the word informed lending, conscious lending. How do you do that? It means you have to have a complete AI and data science oriented approach to a due diligence and remain connected to the life cycle of a borrower. Then only probably you can ensure that your assets are healthy, your assets are safe, and at the same time you are meeting the bank's expectation. And that is why, Catherine, you asked me, why now? I think the journey is so, but why now? I think pandemic was the greatest driver to drive the technology further. It is a coincidence that in India, we launched a UPI just before the pandemic. And during the pandemic, I think the UPI has been the greatest success to the extent that today Singapore has partnered, the Google has recommended to the US Fed that something like this should be created, where even the smallest person is in a position to use it. Having said that, there is a great necessity that the cooperative banks and the small finance bank must see that since they are serving the rural and semi-urban India, which I call Bharat, how do you really create a digitally literate and enabled customers who are in a position to use your technology effectively and get the benefits? I think that talks of the necessity that today you have no survival without a technology. Thank you.
No, I hear you, and I think services to our customers is key. So you have to differentiate yourself, is what I'm hearing from that. And Aniket, what have you noticed with your Refinitiv hat on with regards to what's happening here?
Yeah, thank you, Catherine. Before I come to question, I would like to thank Almus and Refinitiv team for organizing this event and inviting me to be part amongst the distinguished panelists, Mr. Mohan and Mr. Ashish, and an opportunity to talk on this topical theme of banking sector automation. Also, Catherine, who is moderating the event, is my boss. For the people you don't know, I'm conscious of the fact that my quarterly review is pending with her. So I choose my words very wisely, and I hope to share good insight with the participants from the small finance banks and the corporate banks. Now, coming back to the question, Catherine, like Mr. Mohan has already mentioned, he has wealth of experience here. And what pandemic has done is accelerated the pace of probably transformation that we would have seen in a decade in just a couple of years. This is amazing. What a pandemic has done to us, it has maybe led us to the right use of the technology. It has made us believe in the technology. But one of the point I want to emphasize here is that why now typically? Because we have seen, because the pandemic has forced us to adopt technology in some shape and form. The business have realized, or the bankers have realized, or the entire system has realized the benefits of it. So once they see the benefits on it, what they essentially do is they want to embrace it more, invest more, and do more, and be more creative on how to adopt it to further enhance their business model and innovate and experiment. So it is a self-enforcing loop that has been triggered because now you know there's something out there which has made your life very easier. There are benefits in customer service, there are benefits in sound risk management practice and so on. So that self-reinforcing loop is driven by the pandemic and the benefits of the technology, I would say. But having said all of these things, this is definitely there. There are some of the other basic factors that I would like to point out that was that probably enabled the transformation at the pace we are seeing currently. One of them is the advent of the cloud computing and shared infrastructure infrastructure, Catherine, is what I would like to point. Maybe a decade ago, it was very difficult for firm to embrace technology because the costs associated with it. It is not everyone's cup of tea. There was a significant capital you need to put aside for harnessing the power of the data, had the right infrastructure in place to harness those data and generate those insights. But with the advent of the cloud computing, with the advent of the shared infrastructure in the form of cloud again, it has all become very seamless, and anybody who wants to innovate, experiment can simply plug, play, and develop new tools. So that is what has been one of the biggest enabler, I would say, for this transformation and the changes that are taking place that we are seeing in the industry today. A couple of other elements I want to highlight is in the terms of the right skill set. So even if I talk about the kind of the skill set that is available today, I think India is known for its IT service capital, and we are fortunate to be in a position where we have this humongous human capital which can enable this transformation for us. So in every sector, be it banking sector or maybe any other sector, you name it, the people are, that is a very fortunate thing to have, especially we call it in the form of demographic dividend, especially. Then maybe a couple of other things which are not directly related, but these are external factors, the cheap access to capital. So post-global financial crisis, I would say we have been in a decade-long run of cheap capital. And what that capital has done is allowed every business to experiment and innovate. And that is, I think, one of the biggest factors that somehow or maybe somewhere gets unnoticed. Personally, I believe. And to add another angle to it, maybe from the regulatory standpoint as well, even if you pose a global financial crisis, I would say our regulators and watchdogs have evolved. They are also embracing technology, and they have made significant reform events. Some of the names, if I were to take, were MiFID, FRTB, LIBOR, and all these were like once in a lifetime events. These are all events which required support from a lot of technology support from technological standpoint, as well as it was about transforming your existing process to embrace the new regulations, make sure you adhere to the regulatory norms and put the best practices in place. Now, this regulatory standpoint or this regulatory transformation has in fact forced business to adopt technology to make sure they are meeting the regulatory terms and are in consensus. And also, given the fact that data insights can power your business and shaping every decision so that you can get the true value of out of your business is definitely there. But these were my thoughts, Catherine.
No, thank you, Aniket. It went a bit patchy for a little bit, but I believe that the main drive was around the fact that the change to the cloud has allowed people to automate where they haven't been able to before from a capital perspective. And then absolutely the regulatory angle is definitely a factor that's really driven a lot of change around automation. So Ashish, obviously you have first-hand experience from a banking perspective, so really keen to get your thoughts on the actual world. So we're hearing from our customers, but you're living it. So would you be able to give us your thoughts around this?
Thanks, Catherine. At the outset, thanks to Almus and Refinitiv for this seminar and webinar, and thanks for inviting me here. I think a very important and valid points made by Mohan Tansle sir as well as Aniket. The reality in implementation is almost there, except the execution delays, which tend to happen. But clearly, from a strategic outlook, if you were to look at it, particularly from cooperative banks or a small finance bank or any other smaller players, the key important piece, the changes which are happening in banking is when the small finance bank or the cooperative banks or even larger NBFCs, the core piece for their development and growth and existence was, can they take banking to inclusion level, to the mass level? And one had seen that, barring last 6-7 years, for decades, the only strategy was branch-led strategy, which is you set up a branch, you put employees, and then you do. And everybody, given the width and breadth of the country, barring PSUs like State Bank and some of the other banks or etc., nobody really batted deep there, because the cost of infrastructure cost of reaching out to the customer, then the decision making by a lot of these private sector banks was from a credit perspective, and other piece was centralized. So which meant the file had to travel from tier 2, tier 3 cities to the hub location. Even in the hub spoke model, it meant a lot of delays for the customer. And then if there was a query which was raised, it again started the cycle all over again. Right now, thanks to the JAM Trinity, which is Jan Dhan, Aadhaar, and mobility, the deep rooted spread of the telecoms in India, coupled with things like India Stack, UPI, the sheer digital nature of the transaction which India has gone through, whether it part of which started with demonetization, then GST data from a business perspective, and now pandemic. And they say that any necessity is the mother of all invention, and nothing better to create than a crisis. And one should never waste a crisis in creating something big. That's exactly what a lot of companies have done. And what it brings today for consumers is, if you were to, I'll come to banking in a minute, but even if you were to look at what e-com has done, the good brands which were always the privilege of a few people living in metros, etc. Today, a person in tier 3 city can order the same brand, same item from a e-com company, and it gets delivered to him or her at a reasonable cost at their home. Right, that's a great convenience for access. Now, something similar. Now, banking earlier, the unit cost of servicing the customer was very, very huge. But given the tech is the backbone today, and it is not only the backbone of banking, it's virtually any business, if they have to scale, it needs to deploy tech on a large scale. Right. As the result, your unit economics come down. You're able to service deep down. The moment your cost of acquisition go down, your ability to take that delta credit risk goes up. Right. And then on top of that, there's so much of digital data with the AI, ML, and modeling, etc. You can control the risk. The second important piece from a credit underwriting perspective is this entire fraud risk. Given there is so much data available, the ability to catch fraud is very, very high. And I'm not talking of cyber crimes, etc., which obviously potentially can lead to far more severe impact on the banking business. But at least the application fraud, the intermediary level frauds, one has seen coming down. That's an important piece. The challenge here is and the opportunity is what Aniket mentioned in terms of today, if you were to do on-prem installation of technology, unless until you have a very high scale of throughput, the cost would be prohibitive. But given that there are enough and more platforms outside of the cloud and microservices infrastructure, there are enough and more fintechs who are developing these platforms which can be used by the banks, right, who even don't have the full-fledged skill sets of handling data, handling tech, and those are available in a SaaS mode or banking as a service, as it is often called. It just enables the reach and distribution that much more. So the ability to experiment has gone up higher. Ability to reach deeper pockets has become higher. Now, when all this is happening, today, there's virtually a level playing field for all banks, whether it is a large bank, large private sector bank, large PSU, cooperative bank, NBFC, small finance banks. And hence the need for everyone to work on which segment of customers they are targeting and what is the value proposition they are bringing to the table to get the customer, because the competition is intense and it is only going to intensify. Right. The third piece as a trend which I foresee is when any business is making investment into all this, you have to be very cognizant of the fact that you can't predict future, which is 10 years from now, 5 years from now. Hence, any tech investment you are making, you have to view it from a 3-year perspective. If you are able to make an ROI within 3 years, great. Else look at something else. Unless and until you are really investing in something like a core banking solution, which you might take still a longer horizon view. But that's the reason why it is called core banking there. So that's really my sense on where we are going, and as a practitioner, where we are.
Yeah, I suppose the elements of the cancel culture, we're changing more quickly now. The long-term systems are not in play as much as they were in the past. I agree with that. And I suppose you have touched on this quite a lot, by all of you, in this last question, but maybe expanding a bit further. You know, we've gone through a couple of years now with a large pandemic, which we've never seen before, which has significantly hit the capital to most firms, whether it be a small FinTech, a large public bank, or a private sector bank. Can firms still maximize their efficiency, but keeping those costs low? And if so, how do they do that? You know, you touched on the change in technology. So maybe in a nutshell, Aniket, how would you see they keep those costs low, and how would they do that?
Yeah, so maybe, Katrina, again, a very well-pointed question, and maybe Mr. Ashish and Mohan had briefly touched upon it in some shape and form, but I will take it from a different perspective. Again, just bringing in the element of a new age company who is starting a business, and let's against a traditional banking who has been into the business for decades, and how does it differentiate? So for a new company who is coming into the business, there is no opportunity cost. I think it's very evident, and they're able to think from the first principle of the banking sector. What I mean by that is basically they're able to see from scratch, if they were to start a service or a business now, what are the best practices they can adopt, what should be the right technology adopt, and there's no opportunity cost for them. They can simply go test it, try it, and execute it and implement it. So that's simple for them, for a new company who's coming to the business. So they actually in some shape has disrupted the entire banking sector as well, because technology has enabled them to catapult their business model, reach out to mass customers, and challenge some of the traditional banking behemoth, which would not have been possible in probably a decade ago. It was unimaginable. So that is one of the biggest factor with the smallish companies. Now, coming to the existing players, be it a large bank, be it a small bank, who have been into the business, who have their strong client base, what has happened over the journey of their growth is that they have adopted multiple systems in place. What I mean by that is, as the business evolved, maybe they have to address some technology, some system to make sure that the business is running smooth, and there are some processes which were set up to make sure they are aligned with the norms prevalent then. But over the period of time, as the business has grown, these systems have also grown. And the problem that now I think at least we are realizing across our client, and which I will share one example as well, is that there are multiple systems within one entity which are not talking to each other. So maybe just to put things simpler, maybe in the front office, you may have one system, in the middle office, you may have some system, and then within different departments, you may have different system altogether. And all these systems are not talking to each other. So they are meant to probably cater to a specific role. They are meant to do a specific job, but do not address the workflows. Now, what happens is that as you grow, there are so many systems, the complexity of managing the system has become increasingly high. And at the same time, there are new fintechs firms who are adopting the new technology. The cost for you to change is immensely high. So as a traditional player, as existing player, when you have set up in place, it becomes difficult to change. So that's obvious. But the point I want to highlight is that what probably these firms can do to change themselves and become competitive in the long run, or maybe stay relevant in the long run, to put it very aggressively, is that they need to embrace and figure out a way on adopting the solutions which are workflow solutions and which are not siloed solutions. The systems should talk to each other and make sure they realize the true value of whatever activity is going on between the systems. So it can be achieved by automating everything from front office to back office, or maybe it can achieve by harnessing the data that is produced in-house to make sure you have data-driven insights and remove the human bias, which was earlier there. So maybe the term that I use to coin very frequently is basically smarter humans with smarter data. And while we have touched briefly on the AI, so maybe artificial intelligence is what maybe the narrative I would like to drive here is augmented intelligence. So you use the technology to make smarter humans is what I'm trying to say. Now, having said this, and to answer your question simply now, what I would suggest for the business to evolve in a cost-effective manner, maybe there's no right solution, but I think the thinking has to be in terms of the workflow. And they need to understand that while there can be different systems, but it needs to be connected. They need to talk to each other, and you need to automate the workflow and not just a process. So that way, in the longer run, in the short term, you may see this as a cost, but in the longer run, definitely you will see the benefits derive out of it. One very quick example, probably where we as a company have also invested, Kathleen, is on the workflow solutions we really emphasize. So for example, if you're a trader in the front office, we automate the entire journey for you, where we give you the pre-trade information. You will have access to the to our venues to trade, execute your trades, and in the back end, you will have your front office system talking to the settlement systems and the other systems which are relevant for the regulatory standpoint. So for reporting perspective, so all these processes will be automated for you, and you just need to worry about your business, focus your business, and how you can derive the organic growth. So again, not a very simple solution. I think it is easier said than done, obviously, given the kind of complexity that sits, and because there is obviously inertia because of the existing model that you have in place. But the thought that I would like to share is that you need to think in terms of workflow, how you can automate, how you can leverage the power of data and create a ecosystem, and think about the ecosystem rather than just processes and things that happen in silo.
Yeah, I agree, Aniket. And I think sometimes that means from a cost perspective, it might be investing for the longer term. So we're seeing a lot more around big data. So there's a lot more data being driven around this, and therefore it needs to go somewhere. And with a data lake community and data warehousing, being able to put that data into one place and utilize it across the institution makes it much more cost effective in the long run. I agree. Ashish, did you have any other perspectives that you haven't already talked about that you wanted to expand on?
I think great points by Aniket. Just couple of points on that. One of the pieces what makes an incumbent entity difficult to migrate or compete with a fintech is not only the processes but also the core data. Because an institution like ours, which is 115 years old, we would have gathered consumers' data over a period of time, and the data always decays. So if we wanted to migrate to a new system, the greater challenges happen in the shared data migration rather than process migration. Not to say that process migration doesn't come with its own side effects. It does, because a lot of it has to do with the people and the change management. But when somebody is starting new, they virtually don't have any data, and they can start with gathering what data it is. So to handle this, one of the important and the second piece there is typically for a going concern when new features are added. Typically, over the years, last 30, 40 years, what was happening was they were always embedded as an extension of the core product, rather than trying to look at two different solutions talking to each other through a microservice architecture or an API-based architecture. All right, and hence the solution to this lies in you can't go and change all your systems at one go. You will have to have a phased approach, where most critical down to the least critical, you start changing them over a period of time and build it as a microservice architecture. And that will be important to do, because as you move forward, consumer requirements, consumer experience, intuitiveness of the platform, somebody or the other will keep developing something new which the consumer will like. And hence the need to change the front end will be more than it was in the past, and the frequency of that requirement of that change will just go up. And when I say consumer, I'm not only saying the end consumer, it is also the branch executive. So far, people have not really concentrated on experience of the in-house users, because they always feel that they will adapt. You can train them, adapt them, etc. But just imagine what one would achieve if the banking rep who's servicing the customer, the service rep at the branch, he or she, the interface which they use was as simple, intuitive as let's say Facebook, Netflix, or any of those pieces. Then the sheer amount of time you will save from a training, retraining perspective will be huge. And one of the endeavors which we are trying to make, one should visualize that in 2 to 3 years time, will we be able to reach a situation where the servicing rep and the customer are not sitting across the table, but they're sitting on the round table next to each other, both looking at the same screen. And that screen is fundamentally the same which the consumer will use in a D2C situation, right? And because then you can keep changing it as many times as you want without changing the core. Because if you have to change the front end, it is tightly coupled to the core, then your testing overheads are huge. And just to change a version of an internet banking or a mobile app, you'll test all possible use cases. The testing itself will probably take 6 to 9 months. And by the time your new website gets launched or the app gets launched, somebody would have moved the cheese again and will be something else. So some of those pieces, we as bankers, we don't have an option but to go in there, because the reality is customer is not going to give you a premium just because you are a 100-year-old company vis-a-vis a fintech which has come in, except the advantage which we have that A, we are a licensed entity, and B, you build trust over a period of time. And that's a challenge which the new age fintechs will face. But from a user experience perspective, proposition perspective, they're just up there.
No, it's a good point. Trust is something we build on over time.
Catherine, I would like to add a few points to what has been said. I mean, it's very, very important, and particularly from the perspective of the participating banks, small finance bank and the cooperative banks. While the small finance bank are the new generation bank, and I think they are day one, they're born with the technology. But the cooperative bank have been there for maybe, as you said, 115 years or 100 years, 60 years. But luckily, all of them are in core banking. But what is most important for each one of them, when they know that there is no go but to transform, how do I look at the return on investment? I think that is what Ashish did make a reference. And that is where it becomes very, very important that what kind of a cost efficiency can be really raised through an operational efficiency, reduction of turnaround time, and create a growth. See, the growth is directly proportionate to the ease of doing a business. Growth is directly proportionate to the turnaround time. And towards this, I'd like to give two examples for the bankers who are listening. In our country, we have got one platform for digital lending, online processing rather, I'll say, called PSB 59 Minutes, online lending platform. Now, this platform enables a borrower to put his application on the system, which gets processed till it reaches the bank through the KYC, through the credit bureau checks, the income tax checks, and few others. And then the application lands at the bank which he chooses, that he wants to go to this cooperative bank. But then towards this, the cooperative banks and SFBs will have to do a lot of training to their own customers that this is what you could do. And this is, the product is called PSB 59 Minutes. It means in 59 minutes, a customer is expected to get in principle approval. And I think these are the banks who should look for adopting this kind of a thing. Besides this, various other things are there, but I just thought I'll give an example. The second example which I would like to give, today the biggest challenge for the loan growth or credit growth is not only the onboarding or acquisition, it is the documentation, the disbursements. And towards this, the National E-Governance Securities Limited, NESL, has created a platform called Digital Document Execution, DDE, where a customer gets an approval on the system. It's an API-based system. On his mobile, he gets the approval. On his mobile, he gets the document. He signs the document digitally through the Aadhaar-enabled signature. Aadhaar is a unique identity in India, which every borrower is supposed to have. And through this, the complete documentation process is digitized and it is stored digitally with the NESL, and where the banks have access to such kind of a documentation. So this is so much of simplification of the processes, but adoption, as rightly said by Aniket and Ashish, the challenge is that of the adoption. And for adoption, I think the in-house skill development, training customers, training the customer digitally is very, very, very important if you want to really reap the technology. Thank you.
No, thank you very much on that. So moving slightly differently then. So if it wasn't one thing around the pandemic burden, we've seen a wealth of regulation and compliance practices that have impacted our small finance banks and corporate banks, from the LIBOR transition through to ensuring risk exposures are accounted for properly. How does automation support this, and how do we help our customers around this? Because it's not going away. It's here to stay, and if anything, it's going to be 12 more this year. So maybe I ask you, Ashish, initially. I'm sure you face the burden yourself. How do you see automation helping with the regulatory exposure that they're facing?
Very rightly put, Catherine, the kind of regulatory changes which we are seeing are fairly high as compared to what one had seen in the past. And my sense is that they will only increase. And the good news there is because the industry is changing so fast, our regulator is a very good regulator, and they are evolving fast. And for the responsible growth of the industry, it is important that the regulators keep pace with the change, with the technology, and keep guiding us by changing the regulation, etc. Though at times one might feel that now you have the workload has increased because there's another regulation, but overall at a strategic level, if one was to look at, these are all welcome changes which are there. Now, let's coming to your question in terms of automation, how does it help? Let's look at if these sort of regulations were coming in when we didn't have automation in place. What it would mean would be that every week, particularly, you will need to conduct skill through drill sessions or pulse polio to ensure that all the people in the branches, in back offices, etc., who are impacted by these regulations, they are not only aware, they understand them, they implement it for the consumer, so that one is always regulatorily compliant. Now, compare that to a pain of automating it or making some modifications, which can be done by a relatively small number of employees in a controlled environment, in a centralized environment, and you become compliant with the new guidelines. So just the magnitude of the change which you would be and enormity which one would be faced in case one had not invested in automation would be far huge, almost next to impossible to achieve 100% regulatory compliance. Right. So hence, today my sense is use of tech, use of automation is no longer a privilege of few or something which can be done away with. It's base threshold. It's a ticket to play if you want to be in any industry. If you don't invest in today, more sooner than later, you will be a dinosaur.
Thank you, Ashish. Noted on that. Aniket, your thoughts?
Yeah, I think I echo with probably what Ashish very nicely put in, and I think I could not have summarized it very well.
We don't want to be dinosaurs, do we?
Yeah, I do. We need to learn and we need to evolve only. So a couple of points that Ashish clearly and Mr. Mohan has also clearly amplified is that the workflow is evolving. Things are changing very fast. We need to keep up the pace to make sure that we stay relevant in the longer run. So there is no other thought about it, and there is no other way about it. So particularly, just one example, since you have mentioned LIBOR, Catherine, is what I want to mention. It was, again, one of the major events in the industry that we have faced. While it may not be a direct challenge to the participants that we have on the call today, but I just wanted to share the example where one client who was not a very big client, I would say, but still, I would say a mid-sized client, they were into extensive lending and borrowing in the foreign currency, and they were significantly impacted by the LIBOR transition. And it was a major impact for them, again, emphasizing a point which Ashish has said, that when you are in the business for 100 years, there is a lot of costs associated. And while process is one of the overhead, data migration becomes itself one of the biggest challenge. Now, for this particular client, when they have a core banking system in place, it becomes very difficult to, let's say, even in a period of a decade, change everything to adopt to the new system, because there are so many legacy things that you need to consider that even if you miss one thing, it will not only put you to a regulatory risk, but there are significant operation risks that you don't foresee coming because of the way things internally are structured. Now, it is important for them to keep the existing system and at the same time adhere to the new system if they want to stay relevant, like I said. So one of the things that probably we creatively did, and I wanted to share example just to show the benefits of automation and maybe think creatively around the tech, is that while your system is there, you don't want to touch it, you want to keep it. But there is one good thing, that you can use the system to talk to other system. So what essentially we did, without changing the entire stack that you already have, without changing the existing process and data that you already have in the system, we enable the system to talk to some other system, which can provide you the data in a form which is consumable to that system. So with the LIBOR, one of the challenge, again, commonly known as the forward-looking nature of the LIBOR, and the ARR, which are overnight rates, which are backward-looking, and you have to compound to absorb in the system. So with almost all these relatively mid-sized banks, they do not have the capability to compound the rates and consume in the system. So we enable a different system, automated the process for them, where we give them the rates which can be read by the other system in a compounded format. And that's how we solve the problem. Now, if my point to emphasize is that, so automation really helps you terms, and if you think creatively, automation can help you overcome any challenges. It is just that you need to be willing and you need to be open to new ideas. Given your unique situation, there's one way there needs to be a way you need to think on embracing the technology. And while there are costs associated, there are different elements associated, I will not deny it, but you need to think it in the long-term perspective. And you should definitely reach out and explore the market to what all providers are there and what kind of solutions are there. And whatever is most cost effective to you, whatever is delivers most quality to you, is something that you should go ahead with. Like Catherine, you said, in our organization as well, especially post LSEG acquisition of Refinitiv, as if you all know, we have been trying to drive these synergies wherein we are looking at the infrastructure and data to talk to each other and to create the workflow solution. So that is where we, even as a company, when we service to our industry participants, our banking clients, we make sure that whatever synergies we can derive from the acquisition of the LSEG, which has the biggest clearinghouse, which has the unique post-trade clearing department, can talk to the Refinitiv data and analytics, so that we merge the two and create a very very valuable proposition for our clients, which is very cost effective. And again, having said this, the LIBOR piece that has happened is one of the actually, I would say, a significant outcome of the merging of the two organizations, where we just not automated the processes to talk to the legacy system, but we complete the workflow by just not providing the data, but also providing the posted services related to clearing, counterparty risk, and so on. So that is the point I wanted to, I think, emphasize, Catherine, and building up on the point which Ashish and Mohan has already shared.
Thank you,
Catherine,
Aniket.
I want to add on one compliance part, very important, which typically the organizations, when they think of compliance, they think of compliance only what is required at their end. So typically every organization tends to become a compliant from the KYC perspective, anti-money laundering perspective. But I want to give a third perspective to it, is that, is my client also compliant? If my borrower is not compliant to the regulatory requirements, I am running the risk that my borrower fails and my money is at stake. And that is where today the data science is providing a platforms. Various RegTechs have evolved in the system who provide all kind of a data verification, whether your client has paid GST in time, your client has been paying the employees provident fund in time, your client is servicing all kind of regulatory requirement. And I will say that today the banks should not only ensure that their compliance part is properly taken care of, but the customer's compliance, where your stakes are there, is also verified on an ongoing basis. Because this aspect typically we don't give much weightage to, but I feel it's very, very important, because when you look at the various non-performing assets, various failures in the industry, you ultimately find that the warnings, the early warning signal comes from these failures. Thank you.
No, absolutely, Mr. Mohan. And I think, you know, what's going on in Russia and Ukraine and the impact of that within the supply chain is just elevated and creating an open mind as to how we should be servicing not just ourselves, but how our customers need to be viewed as well. And I totally agree on that. So moving away from regulation to maybe a bit more of a trendy topic around crypto. And Mr. Mohan, maybe I'll come back to you if that's all right. What do you think is the impact of the digital rupee on the banking sector in the context of automation?
I'm sorry, Catherine, the impact of?
Cryptocurrency.
Let me tell you that we're all still in the process of imbibing and understanding it. How is it going to really impact? But yes, I mean, as a common sense banker, my complete livelihood or my survival depends on the depositors, the liabilities side. It means unless the depositor is depositing a currency in my account, which is my raw material for lending, I can't survive, I can't grow. Now here, the clarity is not there on the digital currency, whether it remains within the bank or it remains in the wallet of the central banks. If it remains in the wallet of the central bank, then I wonder how the banks will get the raw material to drive their businesses. But I think this clarity is yet to come, Catherine, on in the entire gamut. The digital currency is being looked into from a convenience of a transactional requirement, from the convenience of the cross-border transactions. I think to that extent, probably the adoption of digital currency will happen in all the countries. It has already started. How, in what shape, I think we are yet to really look at it. Even the Reserve Bank of India, which is the country's central bank, is yet to come out on these issues very clearly. But I'm giving a very common sense feel and perspective as a banker that if it is going to remain in the wallet, in the blockchain of the central bank, how does it help me? What do I do?
Yeah.
I
think whether you're for it or whether you're on board with it or you're still skeptical about it, it's definitely a talking point, and there's a lot of data that's needed for people to really make their view and call on where they stand on it. And I think there's a little way to come for some people. Okay, so finally, I suppose I'm coming to my last question here, so please start thinking about any questions you'd like to ask our panel as I go on. So Mohan, Aniket and Ashish, what is the future? So India is setting up 75 digital banking units in the near term, so it's definitely a space for new entrants. What is the importance of workflow automation in the banking sector, and who should we be looking out for? Mohan, I'll come back to you.
I will request Ashish to take up this question first. He's the chair.
You're going to try and steal ideas off each other.
So I think in terms of the future, it all, the industry today has multiple bags from a banking perspective, and all the banks or non-banks are not at the same level. So it will continue to be that way. Each of the bank or the non-banks will chart their own journeys, but couple of pieces which are certainly bound to happen, that the scale will tilt more in favor of the consumer. They will be spoiled for choices. As a result, depending on whichever segment you are playing in and whatever are the value propositions you want to offer, which the consumer will accept in that segment, one will need to become a lot more leaner, efficient, and transparent. The regulatory side, the consumer advocacy side will go up. The social media presence, as it increases, the ability of one dissenting or unsatisfied customer to cause greater damage to the franchise will increase, and hence transparency will play a big role. The regulator will keep bringing out regulations which are more consumer centric, and hence all of us will have no option but to drive that. In terms of the cyber frauds and the security risk, that will continue to go up. As a result, the bankers will need to be one step ahead of the fraudsters as much as possible. And one piece there which I don't rule out is that just like we are seeing collaboration between the today FinTech, whether be on the risk side or the consumer acquisition side, there'll be a lot more collaboration which will happen with tech companies and the banks. Just to be able to drive that forward, there'll be collaboration and ecosystem plays within the participants of the industry, which need not be limited to banks. It could be, there's from a fraud perspective, there could be a great collaboration between a large consumer tech company and a bank there. So that is some piece which I foresee happening. What we will need to do as banks is continuously upgrading our infrastructure, continuously upgrading our client value proposition, continuously upgrading our people skill to be able to take up the future, and more importantly, keep investing in consumer education and ensuring that consumers are learning more, whether it be digital, whether it be underwriting or the regulatory framework as Mohan sir mentioned. So those investments we will need to make, and it's a continuum. There'll never be enough of that what we can do.
No, absolutely. Thank you, Ashish. Aniket?
You're on mute, Aniket.
So you, yes, am I audible now?
Yes, or we can hear you clear now.
I think my net connection is slightly unstable. Apologies for that. But maybe before I answer and give my closing comments, Catherine, maybe I just wanted to share one example, a personal example that happened to me. Mohan sir alluded to the fact about the information not being available around the cryptos, or maybe. So I just wanted to share one example that happened to me 3 years ago. So in Diwali, we have a custom to worship Goddess Lakshmi, Catherine. So typically we buy gold coins that time, and we worship the currency. That's a ritual that we follow. So at that time, my dad asked me that instead of buying the gold coin this time, and this was 3 years ago, why don't we buy the Bitcoin and worship that? So I mean, now he was actually not aware that Bitcoin is actually a cryptocurrency, but the term was so frequently used, and maybe if I would have listened to his advice and actually bought crypto, so maybe I would have actually made some money. So he got to give me a good advice, but what I'm trying to say is that there are a lot of people who are still catching up to the way things have evolved, and they have evolved so fast that some of the people who are maybe slightly in the generation ahead of us have not been able to catch up with the reality. So while the new technology is coming in and definitely helping people, it is also important to understand the underlying elements into it. So while cryptocurrencies and everything tend to be revolutionary, at least there is some perception around the industry. There are few risks highlighted which are quite evident as well, which is one of the risks even highlighted by our finance minister as well, which is the anonymity risk. So banking are the system of trust, and that's why they have been in survival and existing for such a long period of time. What crypto does that removes that trust barrier and creates a level playing field for everyone. So it has its pros and cons. So we can definitely debate on that. But that is what one point I wanted to share, is that we need to be careful and we need to understand before we actually we start something. And I think everybody is doing their job, everybody is diligent about it, so we are waiting to get some guidance on that front. But now, having said this, as a closing remark, what I personally feel, and given my experience over the last couple of years at least, that technology has been embraced, and technology and humans will go hand in hand. So again, just to reiterate the message that I shared earlier as well. So technology makes humans smarter, and that is the true beauty I would say out of it. Just to give one more thing and one more example, since we have talked so much about the lending, and there was one slight mention of measuring the NPS and the counterparty risk. So current processes are fairly manual, let me put it this way. But I've seen now clients thinking very creatively. And one of the examples that I would like to share is that there was one client who was monitoring our news on a manual basis. So basically, to track the counterparty risk, they were actually monitoring news particular to that counterparty, as in a company, what news are coming in, and they were doing sentiment analysis, and there were a team of 20 odd people. So this was something was very common for the team because they want to keep the counterparty risk in check. They gave me a very interesting idea. Can we read this news electronically? Can we derive insights out of this out of the news electronically? Can we do the sentiment analysis, not just for a particular news item, but over a period of time where we have the history associated with the news for this company? Now that was a very creative thought. I never thought of it, and it was a very significant able to create a machine readable solution for them where they were able to analyze news sentiments and derive out insights out of it to track the counterparty risk. And they were very effectively able to monitor their lending borrowing practices, and they were actually able to they were able to lend effectively because it was backed by data and the sentiment around the news analysis that they have created. So maybe again, just to reiterate and re-emphasize is that technology is there, technology is embraced, everybody is looking at it, and everybody knows the benefits out of it, and it is making human much more smarter and much more creative. And I think this is the longer run. In the longer run, we will definitely see the benefits, and we will see the transformation coming in. So yeah.
Thank you so much, Aniket.
So, Catherine, I would like to really give some very practical tips to my banker colleagues on the way ahead, the future, on the workflow automation, etc. See, I think the country has achieved strongly whatever best could be done on the payment system. But country has achieved. Whether each of the bank have really leveraged the payment products which have been developed in the country to its best. Probably the best of the banks may be doing 90% plus transaction digitally. Is my bank doing the transaction 90% plus digitally? If not, what is that I need to do? I think that is the first thing which I'll request the participants to benchmark themselves. That what are they, how are they leveraging the various payment innovations which have happened in the banking industry, and how are they educating their customers through their own branches and trying to see that maximum transactions are pushed to the digital, that is mobile banking, net banking, cards, ATMs, and whatnot, and UPI, everything. Coming to the second point on the lending, I think the focus is now moving to the lending from the payment side. Payment we achieved all, but lending means that I must be in a position to do the end-to-end, right from proactive identification of a prospective customer or proactive identification of the need of my existing customer, processing it, offering it, sanctioning it, disbursing it, and monitoring it. Unless I'm doing all these things digitally, I will be way behind. Let me tell you, there are others. And towards this, lot many new initiatives have come in the country of co-lending, verification by external agencies. You got the agri-techs, you got the MSME focused FinTechs who are offering various kind of services. So I'll have to see that how is it that I really get into that. My complete portfolio of the asset is getting not only developed digitally, but is also monitored digitally. The third thing which I feel is important is the digitization of the various activities which is happening in the banking. And here I would like to bring the reference of the trade finance. That is the letter of credit in the bank guarantee businesses which happen. And I'm sure all the large cooperative banks and the small finance bank have got a large portfolio of the letter of credits and the bank guarantees, which mostly is a manual transaction in the country. And unless these transactions are digitized, where the digital bank guarantees right from the application to the delivery to the complete life cycle of say invocation or discharge or payment, Similarly, the letter of credit issuance, discounting, presentation, all is not. Towards this, again, a great initiative has happened in the banking industry. There is a bankers body called Swift India, and Swift India has developed the products and for the trade finance, where complete digitization is possible on the bank guarantee and the trade finance and the letter of credits. Many large banks have adopted it. The challenge is with the smaller banks. Maybe the small finance bank, cooperative bank will find it a little challenging to directly onboard, but then there are ways and means to go through the service bureaus or the concentration. The concentrator as should be operating for the community. I think all that is, but processes will have to be digitized. But once you digitize the processes, I think the things are today audit is getting digitized. So how do you really reduce the need of the manpower? How do you, and see, the biggest benefit of the technology is the subjectivity is removed from the processes. And all processes are handled objectively. That's very, very important. And when I make a reference of the audit purpose, there is a big difference of how do you do it? How do you really get the objectivity in the whole process? And towards this, I'll just like to make a reference of two reports which all my banker colleagues should know. See, the public sector banks for last couple of years are working on the project called Enhanced Access and Service Excellence. And this is the fifth year where they come out with their document on the EASE 5.0, which talks of enhanced digital experience, data-driven, integrated and inclusive banking. And it has been further put into 5 verticals: digitally enabled customer offerings, big data and analytics, modern technology capabilities, collaborative and development-focused banking, employee development and governance. I think the entire gamut what we have discussed is covered there. And if the public sector banks are working on this, why not the cooperative banks and the SFBs who are actually competitor now today? Very frank, let me tell you, in the marketplace, whether I'm a cooperative bank or a SFB, the customer base is the same. I would like to be the competitor, and if I don't, then as Ashish said, you'll be dinosaur. So if you want to really survive, then you have no choice to say, I am cooperative bank. No. Whether you're a cooperative bank or a small finance bank, you have to be digitally at par with other players in the system. And I think this report is very, very good from the reference perspective. The second report, which I would like to tell for the benefit of my colleagues, all of you must be knowing that the Indian Bank Association, because let me tell you, all of you are a member of the Indian Banking Association. All cooperative banks, scheduled cooperative banks are the members, the small finance banks are the member. And there is an annual event which is done where the Boston Consulting Group is a knowledge partner. And they have again brought out a very good report on the artificial intelligence, OpenStack and blockchain will make banking a poster child of resurgent India. And very clear focus has been given how exactly these things can be leveraged and the growth can be achieved qualitatively. I give a thrust underline. The need is for a qualitative growth and not the quantitative growth only. And India has got huge opportunity. The credit to GDP ratio of the country is still below 60%. I am sure all of you know that globally the benchmark is 100% plus. And thus, in order to really achieve the inclusive growth in the country and reap the opportunity, I think somebody used the word demographic dividend. It's true. Country is really having, the average population is below 30. That being the case, I think it's very, very important that the bankers prepare themselves to acquire the businesses from all sectors, but make the best use of digitization. And towards this, again, I'll emphasize digital literacy within the organization to adapt it and maybe pass it on to the customers and deliberate customer awareness on digitization. You have to enable the customer to adopt the digital enablements which are already there. I think this is what I like to tell as the last word to my dear participants. Thank you very much.
Thank you, Mr. Mohan. And then I suppose the last word from me, like what I've learned from this is that there's a lot of self-reflection that's got to be done, whether you're a data vendor, whether you're a small bank, whether you're a FinTech. You've got to be honest with yourself as to where you are today and where you need help. And you know, we have experts on this panel, and we also have experts within our firm at Refinitiv. So if you don't necessarily know what needs to be done, it's seeking those guidance from people. So thank you very much to my speakers, Mr. Mohan from Swift, Mr. Ashish from SVC, and Mr. Aniket from Refinitiv. Now, do we have some time for questions? How we do?
Sorry. Yes, we do have. We have another 5 to 6 minutes for questions. See, one of the questions is this, what can be the impact of automation in banking economic growth? Well, from this question, I would like to connect it. Recently, see, one of the small finance bank says that they are the first truly digital bank. And they had recently paid around 3,800 crores of amounts to whopping 8.5 lakh depositors of a failed cooperative bank. Okay, this is a big news. Okay, question is it a one-off event? The question is I would like to reply from both Mr. Ashish and Mohan sir. Is it one-off or it is a new thing in coming, and all these cooperative banks have to gear up to reach that? I'm happy at one stage that a failed bank depositors were served, and I also learned that significant of amount of deposits were retained by that bank. So a small finance bank digitally getting a strong client base by taking a sick bank, and by digitalization keeping their clients. It is something very interesting. Your comments both from Mohan sir and Mr. Ashish.
Ashish.
Sir, clearly, I think your question is double-sided. So I will really hope, pray, believe that we don't have any more failed banks, leave aside failed cooperative banks, because that really hurts the economy, hurts the consumer, which is not what we should be looking for. But in terms of digitization, etc., as we discussed, there is no option but to digitize. And one piece for the benefit of the participants, I want to believe is that whenever one is looking for digitization or automation, one has to go back to the drawing board and think of the process ab initio, rather than trying to digitize whatever processes we had in the manual world, just cut, copy, paste, and say, okay, in the digital world, it needs to work that way. To that extent, one needs to differentiate between digital and digitization. Digitization is not about scanning the form and keeping it there. Can you really look at how that filling of the form itself can be avoided through integration with multiple data sources, which give you authentic data, which give consumer convenience, which gives the service rep convenience. So look at it from that point of view. The second piece really in the question in terms of how the automation will benefit, I think it's very clear in my mind that automation and use of tech is the only way to go forward, because automation gives you efficiencies of scale. It gives you consistency of delivery from the consumer perspective, and more importantly, from a revenue perspective, it helps you bat deep and build scale in geographies which otherwise would be very difficult to reach out to. So overall, I think it will only add to great amount of positivity and have a great positive impact on the overall Indian economy, and hopefully the banks who are in the forefront of that.
Thank you, Ashish. Sir, Mohan sir, would you like to add your last word, or you already finished?
I'd like to endorse what Ashish has said. I think the cooperative bank failures is certainly not desirable, but then instead of getting into that analysis, the failure can be saved if you are doing the informed qualitative lending. and if you're doing a good informed qualitative lending and monitoring your own asset base on a regular basis, there would not be an opportunity of failure, and you will be in a position to create a good value for your depositors. In good old days, the cooperative banks were known for giving the best of the deposit rate, interest on deposits. But today they are all into the competitive markets, and that has also gone. I think there is no substitution to automation in the banking industry. And you all have to understand, colleagues, that if so many big consolidations have happened in the banking industry, you have 3-4 examples. PNB absorbed 2 banks getting merged with PNB, 2 banks getting merged with Bank of Baroda, 2 banks getting merged with Union Bank of India. See, all this was possible to imagine and implement only because technology was available. Had there not been technology, let me tell you that today 27 banks have been consolidated to 12 banks, Mr. Bijur.
Yes.
Then we had 27 public sector banks, including subsidiaries of State Bank of India. Today, they are all consolidated to 12, which was possible only and only because of technology. And thus, I don't think that there is any choice. And if you want to grow in the system, that's the way to go.
Thank you, Mohan sir, and thank you, Ashish. It's not my idea to cut down the cooperative banks or they are bad. No. I was just talking to today one of my clients. He's dealing with one of the cooperative bank and another very big, globally, very big private sector bank in India. Okay. His experience of the cooperative bank is simply unbelievable. He says, left a choice, I would like to deal with only the cooperative bank. That human touch, the services, even in my own case, the bank with whom I am dealing, I don't want to name the bank, and the bank denied me a housing loan because I am 65. Right? A cooperative bank come handy and they lend me a home loan. You know, why I am sharing this is only digitalization will not take over all the human touch, the banking needs. Small banks are there in US. We have over 4,500 to 5,000 small banks in US, maybe so in Australia. And I am of a believer, you know, there is place for everyone, including cooperative bank, even the small finance bank, credit cooperative societies too. With this, I don't want to take much time. We are running out of time. I would like to thank Mr. Mohan Tansale for agreeing to be coming and associating with Refinitiv and Almus for this webinar, the kind of preparation he made and the kind of questions he asked pre-webinar calls. It's unbelievable. His commitment and he's telling, you know, develop digital and only developing digital in a, so it should be customer innovative, customer friendly, also monitoring over digital. You know, he thinks beyond the scope and how he started with zero computerization, zero digitalization. We have reached a 90% this thing. You know, I would love to have you some more time, sir. Thank you very much. And to Mr. Ashish, I happened to meet one of his senior colleague in the bank. He said that if it is digital automation, Ashish is the best. So I just sent him a WhatsApp message, and then he was willing and he responded. Then again, same kind of preparation he made, and it was really encouraging. This is not my subject. I'm a foreign exchange dealer. Oh, it's not my topic, but I really enjoyed in the last 90 minutes. Same with many participants here. It's very pleasing to listen to a young man, Aniket, Patni, about the various things and LIBOR transition. I can imagine, because that is my topic, how complicated it is and how demanding it is. You know, with all this digital automation, Refinitiv always comes with some innovative things and helps. It was pleasure to listen, Aniket, and same with Catherine. Catherine has prepared a lot, and she has made it the webinar so specific. She was telling the 3 minutes, all this timing. Her colleague in India told she was very, very specific about the timing, how we manage. I said, don't worry, we'll manage. You know, she has really added value, contents, and as well as planning the webinar. And to you all participants, it may be a dry webinar, not as interesting as crypto or trading, but you all participated, and that is an encouragement. We at Refinitiv and Almus always believe in developing the financial markets and making the customers transaction easily, like Swift. It's when you make digitalization of trade finance, it is boosting the international business, which is very, very critical to our economy. With this, thank you everyone. Thank you, Catherine. Thank you, Aniket. Thank you, Ashish. Thank you,
Thank
Mohan.
you,
Thank you all.
Venkatesh.
Thank you so
Venkatesh,
much,
may I
everyone.
please ask, I believe there's a few more questions in the chat. Could we please circulate those amongst the panel of
Yeah.
experts after this call, and to make sure they get their valid response that they deserve? Thank you.
Okay, sure.
Thank you. Thank you, Catherine.
Thank you, everyone. Thank you, sir.
Thank you, everyone.
Thank you, everyone.
Cheers.
Thanks for participating.
Bye-bye.